If you're a small company and you get an investment from Nvidia and that investment is made public and you're a publicly traded company, usually what happens is that your stock will soar. We've seen that with SoundHound AI, for example, and we've talked about all the other companies that Nvidia has invested a little bit in it, has a stake, bought some shares in the last couple of quarters and years. And that is no different with this little robotics company. And that company is called Serve Robotics, has a market cap of $414.8 million. And I think that you can guess exactly when it has been revealed that Nvidia took a position in Serve or has a stake in Serve Robotics. Yes, it's exactly right here, mid-July. The stock then soared, but of course, since it went public, the stock is still down 61%. Over the last 3 months, stock is up 13.79%. Now, what does this company do? Is it a good investment, etc., etc.? We're going to discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's get one thing straight here. Just because Nvidia invests in smaller companies or in these types of companies does not make it an automatic good investment. Remember, a small investment by Nvidia does not really move the needle much for Nvidia, a company worth $3.3 trillion, right? It's a good strategic move by them because it makes these companies basically stay alive a little bit more, participate in the AI revolutions, robotic revolution, use Nvidia services as well. So it expands Nvidia's ecosystem, Nvidia's reach, basically. So it makes sense for them. Now, from a retail investor's perspective, does an investment in Serve Robotics make sense right now? Because Nvidia has a stake in the company, is a partner actually. Uber has a stake in the company as well. Does it make sense? Well, first of all, let me just say that this is not a cheap stock anymore. As you can see right here, it is now trading at 84.5 times EV to sales and closer to 90 times price to sales. Now, prior to the Nvidia news, it was trading closer to 18 times, which again is not cheap, but yeah, compared to 84.5, it might be considered cheap. But again, this is a very, very young company, let's say, especially when you're going to look at how much money they actually make right now, not much. So yeah, even though you might think, oh, $414 million market cap, that's not that much, right? Well, yeah, maybe, but you still have to generate millions in revenue for it to make sense. Now that said, there are 3 analysts covering this company. Currently, the average analyst price target sits 23.2% higher than the price we're at today. So back in July, it was revealed that Nvidia basically took a position in that company. So Nvidia converted a promissory note into 1.05 million shares of Serve Robotics at $2.42 per share. Additionally, Nvidia purchased 62,500 shares at $4 each last July. And I think overall they now own around 6-8% of the company or so. So yeah, do with that information what you want. Now, this was basically Serve Robotics' last quarter numbers there. Revenue came in at $468.3 thousand, not million, $1,000, which is of course way less than Q1 because in Q1 they got the following. So as forecasted, Serve service contract with Magna was significantly completed during the second quarter, and the company does not anticipate material software services revenue in Q3. So you see here the software services revenue in Q1, that was $851,000. That's because of that Magna partnership, Magna investment. And now in Q2, that is much lower. That said, delivery services and branding increased 80% quarter over quarter. But again, for the next quarter and next quarters, you're not going to get that huge boost from Magna. So it's definitely going to hurt overall revenue. If we look at the key metrics here, so daily active robots and daily supply hours, that's up as well. So around 28% increase quarter over quarter daily supply hours. Now, what has happened throughout this quarter? So Serve averaged 385 daily supply hours during the second quarter, a 106% increase year over year, and 28% increase quarter over quarter. The company also achieved an 85% increase in daily active robots year over year and 20% increase quarter over quarter. There was also a Los Angeles expansion, so in June 2024, Serve announced the expansion of its delivery operations into Koreatown and began onboarding new local merchants through its partnership with Uber Eats. More on that in just a second. Serve also entered into a purchase and production agreement with Magna, under which Magna will become the contract manufacturer of Serve's delivery robots, and signed an amendment expanding its supply agreement with Ouster to equip its next-generation robots with upgraded sensors for enhanced performance. They also said that they believe their continued execution of their plan through end of 2025 will position the company to deploy all 2,000 robots under their Uber Eats agreement, which at full utilization is expected to generate $60 to $80 million in run rate revenue annually. And as you can see right here, our investments by Uber, their largest shareholder and commercial partners, Nvidia, technical partner since 2018, Delivery Hero, German food delivery platform in the EU and Asia, and 7-Eleven, the first convenience store partner, 13,000 stores in US and Canada. Now, they have been making moves here. They say one market with over 300 plus restaurants, 25% month-over-month growth, 24 months of rapid increase in deliveries since early 2022, up to 99.94% reliability, delivery completion 10 times better than drivers, with roughly 0.5 failed deliveries per 1,000. Over 50,000 deliveries in LA, 100 robots for deliveries and R&D. By the way, if you live in LA, those regions, and you've seen these little robots make deliveries, let me know down in the comment section below, because I do think it's a cool thing. And to be honest, I can see it being the future, right? Especially for that last mile delivery. But then again, humans can be clowns sometimes. So yeah, I wouldn't be surprised if sometimes these robots are pushed aside, broken, stolen. So yeah, that's definitely, I think, a bearish side of it. As for their partnership with Uber, they said here that we've signed one of the largest contracts in the AV industry with Uber Eats. So the full 2,000 robot deployment expected by the end of 2025. Our fleet is already integrated into Uber, helping grow to new markets more efficiently and achieve high levels of robot utilization. The LA expansion, at least 250 robots by the end of Q1 2025. Expansion in new markets, next new metro entered by end of Q2 2025. Options include San Diego, Dallas, and Vancouver. More recently, they announced the following: Serve Robotics rolls out third generation autonomous delivery robot. Platform upgrade will support national scaling. So faster, smart delivery robots will support Serve scaling across the US. Manufacturing costs have halved while advancing safety, autonomy, performance, and speed. And new robots have entered manufacturing and are on track for deployment in 2025. Serve robots' intelligence and autonomy are significantly advanced by the addition of Nvidia's Jensen O-ring module with 5x more onboard computing power. So, like I said at the start of this video, it makes sense from an Nvidia's perspective as well. Now, let's make one thing clear again. This is a company that is still losing a ton of money and generating not that much revenue. I mean, for the first 6 months, yes, year over year, huge increase, right? From $102.2 thousand in 2023 to now $1.41 million. Of course, we know why that happened, thanks to Magna. But at the same time, we've seen research and developments basically more than double year over year, actually triple for the 6 months ending. And if you look at net loss, for this year already right now, it sits at $18 million. $18 million of losses, $1.41 million of revenue. So yeah, with these types of companies, you know, okay, they might be growing fast, might have a great future ahead because, well, one, this is probably going to be the future, right? Little robots delivering you food. But is this the company that will make it? We don't know. I mean, Nvidia probably doesn't know either. That's why they're making that small bet. Same with Uber. But the fact that Nvidia and Uber are involved here, a future acquisition could happen, right? Could happen. Plus, they're definitely going to raise more money, so that's going to dilute existing shareholders as well. You have to take that into consideration. We've seen that with SoundHound AI as well, for example. So yeah, these are things that you have to consider. Now, since this is not just software, this is also hardware. Here it's a bit different because, well, software in this day and age can be, let's say, easily copied. Not that easy, but easier than copying hardware. Since this is also a hardware company, they have maybe a stronger advantage by having folks like Uber and Nvidia backing them. Now, as you can see right here, it's on the weekly. So we've got that candle, the week just before the announcement was made that Nvidia basically invested in that company or took a stake in that company, all the way to the top. The stock soared more than 900%. And since then, the stock is down closer to 60%. So by the way, congrats to everyone that bought this company before. I mean, under $3. And if you sold the top, I mean, bravo to you. Right now we have been hovering around the same area for quite a while, actually, since the end of August. And RSI is a bit neutral and actually trending upwards. So some solid momentum with the stock since, let's say, the bottom here under $7 earlier in September. Now, overall, again, I like these types of companies, robotics, AI, autonomy, stuff like that. But would I invest in this one? Probably not at these prices. I know it can go much, much higher, right? It's a small company, early, okay, great. But yeah, probably if I found it, just like SoundHound, I found it under $2. Would have been great if you found it. If I covered this actually back in July or in May, would have made a little bit more sense. But even back then, it was quite expensive. Even today, it still is quite expensive. So for me, this is one to keep on the sidelines. If we see more partnerships, suddenly new investments, revenue actually increases more and more, and costs, R&D and all of that actually stabilizes or comes down, then I could say, okay, maybe it makes sense to take a small bet here, like a really small bet under 1% of the portfolio and see what happens. That's just my way of thinking with these types of companies. Again, you can be extremely bullish, extremely bearish on these ones. That's completely fine. Try and make your case down in the comment section below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that, and I'll see you all in the next one.